All right, we are here with Jeff King of Ramey King. Jeff, thanks for jumping on. One of the things that has been coming up in a lot of questions to me has been insurance. So I wanted to bring you on and talk a little bit about what you are seeing in the market. So maybe to start it off, give people a little of your background and a little bit about your insurance company.
All right, James, glad to be here. This is always a lot of fun with our friends at Low Capital. I'm Jeff King. I'm with Ramey King Insurance. We're an independent agent. We have a specialization in multifamily. We're in Denton, Texas, a little bit north of Dallas, Fort Worth, but we do business. Most of our work is in Texas, but we do business nationwide. And we can insure anything. Just our focus here in this discussion is multifamily, but we insure all types of real estate as well as businesses and personal lines. And personally, last month I've been doing this 40 years. I know I look young. It's
well, well,
I feel
congratulations. Congratulations. I've got some questions here, but definitely anybody on can put your questions or comments in the chat, and we'll definitely bring them up here. So this is probably the number one question that I get is, what is the best way to decrease? I think this person's talking about cost, but probably premium. So decrease my premium. What is the best way to decrease my insurance premium?
the decrease. Hopefully, the agent you're dealing with needs to be a specialist and needs to know the right markets. There are a finite number of markets to go to in the multifamily world, hopefully, and the good people know where to go, just like us. We know where to go. But the other part, you need to help your agent tell a story to the underwriter and think of it. Why should, other than doing business, but why should an underwriter first insure your property and hopefully insure it at a better rate? And the way we do that, the story, we find everything we can out about the property. Also, we need to know the number of units, the square footage, the date it was built, the type of construction. But also in that, with updates and things that have been done to improve the property. The four areas that we run into are the age of the roof, electrical updates, which don't happen a lot, but it's say you have aluminum wiring that's been pigtailed, or you have a certain breaker that you've changed the breakers out, or even a previous owner has changed the breakers out. Plumbing is another area, but electrical, heating and air, primarily the breakers and the age of the roof. Gather that while you've owned a property or a previous owner, or even as far back as you can gather that. And we don't need the exact date, but just in 1995, this was done. In 2005, this was done. And the best place to get that is from the listing broker. They'll have to get it from the seller, and sometimes they have to dig deep in their records to have some of that. But gather as much as that as you have. We'll use everything we can, and if it's not relevant, we don't use it. But at least you have it.
All right, so the more information you can work with, the better
It
on
is.
sort of telling the story for decreasing the insurance premium as much as possible. Um, you know, what when do when should people reach out to you in terms of starting on a quote? Is it
If it's if it's actually as soon as possible. There's two situations. If it's a new purchase, we do a lot of indications for people as they're looking at a property, and they're just looking at the OM, deciding and trying to have the deal pencil out, and we can give them an indication. But to get a firm quote, certainly once you have a property in contract, usually you've got somewhere between 60 and 90 days to get it closed. At that point, we just need to start. Or if you have an LOI and you think it's going to be accepted, you know it is, you just have to hammer out the contract. Let us get started there. And not that it takes that long to get a quote, but there's a lot of information together. We'll pick three or four different carriers that we think will compete on your property. Then we get that information to them. There's dialogue back and forth between the underwriter and us and you and your broker to put that quote together. Most of the time, it's just getting that information, getting them to decide. I've joked that It's 10 hours of hard work spread out over 3 weeks while we wait on people to do their job.
Yeah.
It's,
Uh, no, I agree. So
sometimes,
so in terms of starting on quote, that's for someone who's maybe buying a new property. A
yes,
lot of people who are going to listen to this, they already have insurance or they already
mhm,
have
will.
their guys set up. So what advice do you have for existing owners? Because it seems like, I've read anywhere from 20% to let's say 50% on renewals that people are getting hit with increases in premium. What advice do you have for existing owners? Is
We,
there sort of best practices on this?
we like to start 60 days out, but at least 30 days out. If you have a renewal and say it's coming up October 1, really, and here we are mid August, this is not too early. If you have an extensive schedule of property and looking at them all at once, that's 60 to 90 days. A lot of it's just gathering the information, but that's not too early to start. We'll run into people that want to shop their insurance midterm during a policy period. Sometimes that's not the best time to do it. The reason they might change if they just have a particularly onerous, expensive policy, and that's all relative in this discussion of insurance premium. But or if they're refinancing and the coverage they have does not comply with what's being required by the mortgage company. Um, it does make some sense to look at that point. There are minimum earns in policies, but certainly on a renewal, 60 days out is a good time if it's a larger schedule, a little bit longer, but no real reason beyond 90 days other than the agent just to get to all the markets.
And so I think you sort of hinted at this, but
Right.
so a lot of times people will say, well, I'm on a master policy and it's across, 10 or 20, 30 properties or more,
Yep.
versus an individual property for property. Can you explain that a little bit, sort of what the pros? It seems like it sounds like the master policy is better in terms of premium a lot of times, but maybe that's just what I see. Maybe give people an idea of sort of what the difference is and then pros and cons of each.
There are two types of. First, an individual policy is easy. It's a policy they have on one location. Occasionally, you'll see someone has several properties. They may have one policy that covers all those properties. But in our business, there's two types of master policy. One is where it's a large schedule, 10, 20, 30 policies all on one policy. The thing, and we like master policies as well. It's a little bit easier to add locations to a master policy. There's always a property that's a little too much this or not enough of that. It makes it easier to add. But the other master policy we see are risk purchasing programs. We access two or three of those, where it's a master policy, but it's got several hundred locations of all different individuals. Typically, they're all apartments or they're all commercial property. They're all in the same line of like type of industry. But this is typically run by a agency group or an organization, and we have quite a bit of ours on that, where a person has what they think is their one location, but is entirely added to one of these master policies.
Okay, so when people send you, let's say a new property to quote, do you usually assume it's on an individual policy, or do you try to add it to a master
We
policy?
generally try to add it to a master policy or
I
to
try
one
to
of
add it.
the
Okay,
programs. It is bad. The coverages are very broad.
right.
The underwriting is typically broad. Another thing you do see master policies are our property management firms that may have their policy. Once again, their policy most of the time is tied to one of these programs where it's not their individual policy. Now they have their individual relationship with the underwriting of their group of properties onto this policy with a particular agent, but most are added to some type of master policy. And to have one of these risk retention programs, you're talking several hundred of locations, several $100 million of valuation. While a person may have $100 million of value, which is a significant number, it's not that big of a number to drive their own insurance program like that.
Okay. Yeah. So, I mean, this came up on a recent as a recent question was the different guidelines. So some people, they're like on a bank loan right now, and then they've done the rehab, and they want to refi to Fannie and Freddie. And one of the things that they don't think about is Fannie and Freddie's guidelines, I'm thinking, are a little bit higher, a little bit more stringent than just maybe like your local bank insurance requirements, right? So maybe
There's
can you talk to maybe a couple of those differences so people have an idea before coming in?
sometimes the banks have very similar requirements, but most time if it's a private bank, their local banker, all they're looking for is insure my property. I've got a $5 million loan. Write me a $5 million policy. Make sure you have liability. And many times they don't look any further than that.
Okay.
Once you go to Freddie or Fannie, you've got you've got replacement cost issues. Not because you're insuring at a number. The Fannie and Freddie may do their own estimate and tell you what their number is of replacement. They have deductible requirements, generally 25 to 50,000 AOP, all other perils. I know I'm talking insurance jargon here. But then in wind and hail, they typically will take a maximum of, it depends, I think 5% for windstorm, usually down to 2%. And most of the time that's pretty easy to get, but half of our companies we deal with are starting at a 3% wind and hail deductible. And we may have to lower it to 2%, but they also want ordinance coverage. I won't go into what ordinance is, but it's specialized coverage, part of the property coverage. But most can get that, but occasionally if there's where we run into more challenges, if we have a property that's had some claims issues that doesn't qualify for one of these programs or these master policies, we end up truly writing them an individual policy, which we have to add some of these coverages. And it can get a little pricey or a little more difficult to line these coverages up.
All right. We had a question come in
All right.
from my buddy Anselmo. So we're seeing values come down probably from the peak, let's say late 21, 22.
Yep.
And, a deal that might have traded for $10 million is now trading for $7 or $8 million. And
Okay.
so I think where Anselmo's going with this is, can we get cheaper insurance?
Well, possibly,
Okay.
not necessarily, because most of these programs we access have a minimum dollar amount that they require to insure. It may be anywhere from $90 to $100 a square foot. And most of them, that is an artificial number. The full replacement policies, since we're aiming at replacement, the replacement is probably anywhere from $100 to $150 a foot. I've seen some higher recently. It depends how much is there, multi-story buildings. But in this case, unfortunately, it's not helping. What we're talking there has more to do with market value versus actual replacement cost.
Okay.
But it may allow us, if bank has had a higher number and just an artificial number they've based on, they may be able to lower it in a different valuation. But unfortunately, not something that immediately comes into play.
All right. Dallas is, I guess we got some lakes, but we don't have any oceans or close by. But for those in coastal markets, any advice because we've seen those markets sort of increase. And is it really just because of the number of carriers in those markets that people realize they were the only carrier and they just increased the rates, or what happened there?
I think there's some to it, but in the coast, while here we are in Dallas, Fort Worth, we have hail and wind issues here. But down on the coast, you have the hurricanes. Hurricanes are the granddaddy of all the claims. They're the big one. They affect everybody when they comes in, or almost everybody in a large way. And historically, we just don't have that many carriers making a market for coastal real estate for that issue. And or if they approach it with different deductibles, different appetites. And there has been some restriction. There's one of the main carriers that we've seen historically as a coastal carrier is changing some of their underwriting. And I think that's where the biggest issue has come. Well, we are an interesting insurance market, but I truly think most of that's come while that carrier is changing their underwriting and putting some business back out on the insurance street, finding new homes. But we should
Okay.
be through that sometime here in 2023 and hope to see some settling. But it has affected the rate. And if for buyers, if they are buying a property and there's a number that the seller was paying, the buyer needs to get their own. They need to get their own number anytime, but particularly they need to get a number to plug in, even at the OM before they even make an offer.
Right.
It may very well be a substantial difference.
Okay. What is the best way for people to reach out to you, Jeff, if they have a question on, whether renewals or a new deal? What's the best way for them to reach out?
Anyway, our number's 800, good Lord, about 940-382-9691.
Okay.
RameyKing.com, RameyKing.com, or by email. Our website does have an application on it. They can send us some information, whether they want a firm quote, renewal quote, indication at the time they're looking at it. It's there for their use. We have 10 people in the group that specializes in real estate, but my other two agents are JT Lynch and Aaron Kelso. And our email is just first name, last name @RameyKing.com. And other than that, just drop by the office, catch us. We are available. We want to help you.
All right. And you're going to be at the Old Capitol Conference October 4th and 5th, but with the whole gang. So definitely step by the booth, say hi to them, talk some insurance shop with them. And we always appreciate you sponsoring our events and coming out. So thanks for jumping on and give us a little lesson on insurance this afternoon. And we'll see you in a couple weeks, I guess.
I know. We look forward to it. We'll always have a good time. It's for everybody's sake. We'll be there.
All right. I appreciate it, Jeff.
All right. Thank you.
Bye.